Hey everybody, Jake here with Jake Wu Market Research to go over the weekend update into the final days of November before we jump into the last month of trading in December. And we'll be going over ES, NQCL on the future side of things, and then Bitcoin, NVDA, Tesla, Apple, and AMD on the individual names side of things. So before I get started, remember I do have a partnership with Optimus Futures. This is a futures broker that you can actually tie in and connect to TradingView and trade pretty much directly through TradingView while you're using the Optimus Futures to actually make the trade. And that's exactly where your money would be, not technically on TradingView, through Optimus Futures. And so if you guys are interested in that, check out the link. I always provide the link in the description for that, as well as my Twitter subscription, which is $10 a month. What I'm going to be going over in this video is very high level, just looking at the weekly chart. If you want more in-depth levels, especially looking at SPY, QQQ, IWM instead of just the futures levels, then definitely check out the Twitter subscription. As I mentioned, it's right through Twitter. It's on the main page on my profile. Just click subscribe. It's only $10. It's 33 cents a day. And you get levels every day. You get areas that trigger for the bull thesis, the bear thesis. And on top of that, I do share trade ideas and share ideas that look like high probability setups and that type of thing. So a lot of information in there as well if you do want a little more of an in-depth analysis going into the week ahead. So as we get started, we'll go over ES. That is just the S&P 500 E-mini futures on the weekly chart. And the last time we did this video, we were really looking at this huge volume shelf, which is a function of essentially the volume profile, the anchored volume profile on TradingView. And if you remember, we were looking at this area where we both had the October 2022 anchored VWAP from that pivot. And you can essentially see that we technically closed a little bit below the point of control, but we did hold above the bottom of this VWAP zone. So that really suggested that things were getting interesting here for a potential reversal, especially when you have a confluent zone of multiple indicators. And that's exactly what we had. And notice what happened was we literally went right through this volume gap. So we moved quickly down through the volume gap, and then we moved quickly right back through it, right up to this break-even supply zone. So this was a great case study using these areas of liquidity and then areas of kind of dry pockets of liquidity, which are these volume gaps where you just don't have a lot of volume within this area. So this acted as a perfect level resistance. We finally broke above it. The first week of November moved through the next volume gap right up to the next level of liquidity, this next break-even supply zone. And then we actually closed above the top of this volume shelf, and then we are now moving towards the previous resistance from 45.8875 all the way up to 46.3450, and that would be an area where we definitely want to watch as potential resistance. But even on the even on the daily candles right now, things are starting to get a little iffy, especially after 4 green weeks in a row. That means 4 weekly closes higher than above the previous week. And generally when you have that many weeks in a row, you at least get some stalling just because you don't necessarily have a huge pullback. If you're trading something on leverage or you're trading options and you just get some stalling for a couple weeks, that can really hurt your position, especially if you're not trading common stock. So just something to consider. As I mentioned, I did go over a lot more in-depth analysis looking at the indicators that are suggesting a potential reversal going into the coming weeks, and simply just a short-term reversal. After such a big move up, it's actually healthy to get some type of a pullback because you essentially reset everything, right? Let's say people start selling and they start buying back around 44.65 or something at a lower price. You're essentially resetting the market and creating these higher levels that people are getting in and essentially these break-even zones. So a pullback is not unhealthy going into the next week or two, and it would actually be very welcomed and kind of reset things across the board. Now on NQ, we have this pretty large ascending triangle here forming, and you can see here that we did not actually technically close above. You can see here that the futures markets are still open for a little bit as I'm doing this video, but for now, we have not closed above the top of this resistance zone. You can see here that we do have quite a bit of space before we get to the apex of this ascending triangle. So do we get a pullback and just kind of trade within this ascending triangle into the end of the year? We'll just have to see. But once again, we did have 4 green weekly closes in a row here, so that's something to consider maybe for price to cool off a bit. However, if you look and see here, we had 4 green weeks in a row back in January of 2023. We pulled back for about 5 weeks and then just continued up. Here we had 6 green weeks in a row back in May all the way to June and simply just consolidated. We didn't have a big pullback. So just remember that just because we have these multiple green weeks in a row doesn't necessarily mean anything other than maybe some consolidation, maybe a little bit of a pullback. But for now, we are definitely nearing the highs that we had back in July, which generally is not the most bearish thing, at least for the medium to longer term side of things. And we'll just see how this plays out going into the week ahead. But there are definitely some short-term indicators on the daily chart suggesting that we could at least have a little bit of a pullback as momentum seems to be stalling a little bit here. On oil, can't lie, cannot be too mad about this pullback that we've had over the last really 2 months now. So, a lot of people thought that the war in the Middle East was going to continue to move prices up, but there was a lot of uncertainty priced into oil. That's why it was so high. And so when you have an event like this, if a lot of that was priced in, then the market's not going to continue up. You're actually going to get a pullback, and that's what we've seen. I mean, if you look at oil, pretty much from the highs to the low last week, oil's down almost 25%, and you've definitely seen that at the pump as gas prices are much lower than they were in September and October. For now, we are holding this trend zone here pretty much from the May pivot. That's where I started the trend zone and then just extended it here to this wick for the week of November 13th. And you can see what I did was to create the width here. I just connected the top of this trend zone to this wick here from the week starting Monday, the 26th of June. And that's what creates this zone rather than just an exact price level. Notice here, this week's low was right at the top of the zone. So these zones are extremely helpful to give you a sense of general areas to watch rather than just an exact price point to watch, which the market rarely respects on the penny. The market moves in kind of a margin of error. There's no exact point to use that's going to be perfect in making the market. Now, if we do get a move to the upside after literally 5 red weeks in a row, 79.29 is the VWAP anchored from the May pivot here. So if we did get a move to the upside, this would be a potential level of interest. As I mentioned, you want to look at the market in zones. So I would just call it 79.25 all the way up to pretty much the high here that we saw right up to around 79.75. So if you didn't see where I pointed, pretty much just last week's high here, right around 79.75. And then down here to around 79.25. And that would be your general zone to look at going into the weeks ahead if we did get a move up. Notice that the market has kind of been inverse with oil lately. So if oil does get a move to the upside, it may make sense that the market pulls back. The market starts to price in maybe some higher prices due to just the cost of oil really affecting almost every facet of the economy. So definitely keep an eye out for potentially a bounce in energy here going into the week or two ahead. And that VWAP from the May pivot would definitely be your first level of interest from 79.75 all the way up to 79.25 all the way up to 79.75. Now, going into Bitcoin, Bitcoin did break above the 37,900 area that I was watching for kind of a break to the upside here. We are pulling back, which makes sense if the market is starting to become a little risk off. Bitcoin may experience that as well. And the main thing I'm watching here is really a close above 37,970 on the weekly chart to continue up. Now, 1, 2, 3, 4, 5, 6 weeks in a row, this has been green. Now, the week is not over yet for Bitcoin. It closes on Sunday. I do this video on Friday afternoons. So we still have some time here for a potential close above the top of this zone. We did break above it intra-week, but we are back below it now. So definitely keep an eye on 37,970 for a weekly close above that to trigger a move up towards that psychological level of 40K that everybody is talking about. Now, if we continue to move up on the longer term side of things, 45,900 to 48,200, which is simply just the previous pivot zone from February and March of 2022, would be your longer term upside level to watch. NVIDIA is definitely a reason to take a little bit of caution in the market right now, because this has really been a leader for quite some time, and a lot of people are looking at NVIDIA as kind of almost a way to look at how the market's doing. And this is another great example of earnings were likely priced in going into the earnings event on Tuesday. I mean, you had, if you look from the very low back in pretty much early November to the high that we saw this week, NVIDIA was up almost 29%. So you really had to have just some news that the market was not anticipating at all to get a continuation up after a 30% move in the common stock price within 4 weeks or so. 499.25 to 502.65 is your area above. So that is kind of the previous highs that we saw in August, and something that we did test and break slightly above intra-week, but notice here how we pretty much rejected right after that when earnings were released. So going into the week ahead, if you just look at some of the previous highs here, we're 77.50 is kind of a line in the sand here. If we break down below that, things could get a little interesting, and I do go over the more in-depth levels in the subscription for downside here going into the weeks ahead. Tesla has been a great case study, and if you guys remember doing this video a couple weeks ago, or maybe about a month ago is my last video, we were watching the January 23 reversal, the VWAP zone from that area acting as an area of support. You could see that we had not only kind of a hammer candle form, not technically a hammer, but kind of you have a long wick in the body near the top of the range of that week from the week of October 30th. But it was also an outside bar. So there was definitely room for upside after such a big inside bar forming at a crucial level like this VWAP zone. And we went right through the volume gap. So we were talking about that volume gap above and then the break-even supply zone pretty much down to around 244.50. And that's exactly where we have rejected over the last 2 weeks. So if I just take out this arrow, you'll see 1, 2. Both weeks have really had trouble at the bottom of this area. And if you're not familiar with the volume profile is essentially just measuring volume as a function of price. In this case, I'm measuring all of the volume that has aggregated since the January 23 reversal. And you can see there's a ton of volume above. So imagine that you bought Tesla at 260, or pretty much from 245.50 all the way up to around 265, and price went down below 200. As you're getting back up to your break-even price after having an unrealized loss, you may take some shares off the table, or maybe you sell the entire position. Each one is a possibility, but either way, that adds supply on the market, which creates short-term resistance. So that's why you've seen the bottom of this break-even supply zone be a resistance zone, because people are getting back to break even after a big drawdown after earnings, and you're seeing this area become an area of resistance as some people take shares off the table. So that is a kind of a lesson on using the volume profile. Anytime price is below a big area like this, if you want to call it a volume shelf, because essentially it represents kind of a shelf in volume in the volume profile. Anytime price is below that, it's going to act as supply. Anytime you have price above a volume shelf, a large volume node, that's what I like to call break-even demand, because as price moves back down to, let's say, this area here, let's say that you bought Tesla at 215 a couple weeks ago, it's at 235, it moves back to where you essentially bought it. You had profit, now you're back to break even after buying it at this price. I call that break even demand because as price gets back down to that area, shares a lot of the time on the market dry up because people don't have profit, at least from this general area from around 213 all the way up to around 220. They stop selling because they don't have profit, drying up supply on the market. Sometimes, especially if demand is constant, will actually help price stabilize. So you don't necessarily have to have buying at these volume shelves and these volume nodes when they're below price. Sometimes you just have supply drying up because there's not as much profit in the hands of people who own the stock than there was previously. So that's something to consider when using the volume profile and using these areas as supply and demand zones. Apple's another one that's looking a little iffy here. You've got kind of a shooting star formation right at this previous resistance zone. Last week we filled the gap. I think it was right around 190.69 or so, and we moved a little higher than that. But as always, gaps can act as short-term levels of resistance, and that's exactly what's happened over the last couple days during this short week. And not the best looking candle going into the week ahead. And seasonally speaking, the first week of December is not always the strongest. So we are going into the end of November, into December, as the market is overextended. Definitely something to keep an eye on, as we did fail to close above the top of this previous resistance that we saw back in September, all the way up to 189.95. So we closed at 189.88. So about 7 cents below the top of that zone. Definitely caution going into the week for Apple. And as I mentioned, I go over much more detail in the Twitter subscription on this particular chart, looking at the daily and the weekly candle and levels to watch below as we potentially pull back, at least in the short term. AMD's been a really good one to watch as well. We had that VWAP pinch that we were watching in the last video that I created. We failed to break above it during the week of October 30th, but then finally broke above it during the first week of November, and we gravitated right to the previous resistance that we saw in June and July and even into August. And so for now, this is the fourth green week in a row. As I mentioned, just because you have 4, 5, 6 green weeks in a row doesn't necessarily mean that you're due for some huge crash. It just suggests that we've had a pretty big move to the upside with pretty much a month of green. And from the lows before earnings and then after earnings, we've moved up about 34%. So this has been a pretty strong move to the upside. If the broad markets do take a little bit of a hit going into the week or two ahead, pretty much simply from profit taking, nothing bad. It's just, when you're up that quick in such a short amount of time, people take profits, especially into the end of the year. Maybe they've got some tax loss selling and other names that aren't near the previous highs that we saw earlier in the year. You may have some tax loss selling going on. So these are just things to consider going into December, and we'll see how things play out. But for now, we did close slightly above the top of this zone at 122.10, but literally only by about 18 cents. So definitely something to consider with this kind of spinning top doji forming here on the weekly chart right at this resistance zone, as the markets in general are looking a little heavy. That is all I have. As I mentioned, just want to do a quick overview of the markets, mainly looking at the weekly candle charts. Remember, I do have that partnership with Optimus Futures. If you are interested in more of the future side of things and looking for a potential new broker, they are someone to check out. I have the link in the description to check them out, as well as the Twitter subscription. I did finish all of my analysis on the daily and the weekly candles for about 15 plus names, ranging from SPY, IWM, QQQ, Meta. Pretty much I focus on the larger names simply because that's where the most liquidity is, and that's what mainly people trade. So I'm definitely not someone that's posting 30 different charts, but I'm posting very in-depth analysis for around 15 of the largest, most liquid stocks in the market. If those are something that you're interested in, you may find value in the subscription. As I mentioned, it's only 33 cents a day, so it's definitely not going to break the bank, and I do try to provide a ton of value for you for that price. Hope everyone had a great Thanksgiving for those who celebrate. If you have any questions, you can always send me a DM on Twitter or just comment in the comment section below on this video. And I hope everyone has a great weekend and a great rest of the month of trading. And we'll probably do another video next weekend as well. So be on the lookout for that. Please like and subscribe so you'll be notified when that next video is also launched next week.